Alright guys, welcome to the channel. Appreciate everybody for tuning in to the first YouTube video. Um, Today I'm basically going to cover the price delivery for Monday, and from there I'm going to transition into a pre-market game plan for tomorrow. I'm going to be trading the New York AM session, and going to be sort of doing a little bit of a markup just to prepare for tomorrow, so that way I'm not too rushed as soon as I wake up. And then to close off, I'm going to do a little bit of a prop firm review, not like a review or anything like that, just my progress so far, where I'm at, what I'm working towards, and just so you guys can see where I'm coming from, and trying to be as transparent as possible. If I can just have your guys' patience, this is like once again my first YouTube video, so I'm not really too familiar with the technicals. Even just to get this simple setup that I have right now took me a little minute to figure out and configure. The sound was just like horrendous, so I had to invest a little bit into a mic. And yeah, so let's just not waste too much time. Let's just get right into it. So let's start reviewing Monday. Currently right now, this is Tuesday's candle. We are on a 4-hour chart. Let's go to a daily chart so let's see how things are. So let's go ahead and just hide this. This is a 4-hour at least inversion fair value gap, and then we'll go ahead and take this 4-hour civvy off, and we'll go ahead and take this 4-hour civvy off, just so we can see clearly on a higher time frame to see what price has been doing. So overall, I have been bearish. I've been bearish for about quite some time now, actually. It's going to my trade journal here. I do go through TradeZilla. I think it's one of the best organization apps for traders, to be honest with you. I'm able to do my journaling. I did my back testing, notes, everything like that from here. Very organized. Before that, I used to use Notion, and even before that, I used to use Evernote. And we'll go through all that as well too. I would really like to show you guys, my progress, just coming from like unorganized basically, and clueless, not knowing what to do, to finding my my footing, and started to make some sort of consistency. And we'll go ahead and make a YouTube video about that as well too in the future. But going back into what I was saying, and if I ramble, I do apologize, guys. I'm trying to stay on topic as much as possible for y'all. So since like I think in June I was prioritizing buys. Let's see here if we can. Oh no, I was shorting over here in June. Okay, let's see over here. Okay, there we go. So those are the longs. I think mainly I was long in June. Even the losses here as well too. This is a short. Okay, let's see here, long, yep. And I think mainly these were all longs. Even this one right here, this loss. Let's see this. Yep, long. And these two trades. Yep, long. So mainly long in June. July is where I sort of shifted my perspective to be bearish, because I think in July that's when the market made this right here. Exactly. See, look at that. July 31st, Thursday. It made this all-time high right here, and it looks like we're currently sort of trying to gravitate towards up there right now. Monday's candle, surprisingly, it was bearish with it taking out the previous day's high from Friday, and looks like it found some sort of support over here at the daily Wix CE level at 23,584.25. So it's very interesting to me. I do want to prioritize going short, just because the seasonal tendency in summertime, excuse me, not too much liquidity. And if I'm not mistaken, I think ICT states that as well too, to be bearish in like the summer months, and then like during like beginning of fall, even midway through fall, you'll see a shift with the three indices, with them not making, well, like one of them will not make a they'll stop making lower lows, you know what I mean, whether it's the YM or the NQ or ES, and there'll be SMT divergence on the higher time frames. That's when you know the shift will be there. So that's like that's like, you know, more of a further perspective, but currently right now for this month and going into summer, I am primarily bearish. So okay, so basically Monday took out previous day's highs, so let's go on a lower time frame over here. All right, fresh chart. We got the 1 minute over here, we got the 15 minute up here, we got the 5 minute up here. Okay, so let's see. So I apologize if it's a little bit laggy. Not working with the most optimized equipment, so, but you know, we'll still go ahead and do a little review right here. Nothing too crazy. By the way, I didn't trade today whatsoever at all, just because it was very consolidated, and I didn't even look at price delivery on my end. I was just watching another streamer's live session as they were trading their prop firm accounts. So again, I tend to stay away from the market when there is typically no news, or there's, like, you know, only yellow folder news. So I only like to trade medium or high impact, which is orange or red folder news events. So if we go over here to, what do I use here? I use Forest Factory, that's right. It's being very, very slow now. Man, why is this being so slow? I think the computer's not able to handle me doing this live, and not live, but like me recording, and yeah, because I have a very old computer. So let's see if we can get this loaded up. Cool. All right, here we go. We're back in action. Here we go. All right. So yesterday we had a yeah, not too much. This was announced at 10 a.m., which it wasn't on here before. It was added to calendar, yeah, before it was released. So it was just, you know, the day of. So I didn't even realize that. But regardless, I still wouldn't have traded it, just because Mondays, no news. It just tends to be very choppy, very you know, consolidated, gyrated price delivery. And I don't perform well in those conditions, and it's just better for my mental and to just sit that out, watch, you know, and yeah, and maybe just, you know, start doing these now, you know what I mean? I'm having fun so far, you know, just not really used to talking over the charts and stuff like that. Most of the time just me quiet and just, you know, doing my markups and stuff like that. So I'll be trying my best to be informative as much as possible. If these concepts that are new to you, I'm not going to be doing too much of a why this, why that, explaining too much. I'm just going to be doing it sort of. I'm going to make all the explanation, and I don't want to say lecture part, because sometimes these things can turn into a lecture. But I'm going to be doing all that stuff, you know, towards, you know, later YouTube videos. I'm just barely getting my feet wet with this stuff and trying to get myself to be comfortable enough to continue this. So anyways, I do use ICT concepts. I mainly went through, I did go through his, I think his last mentorship was like in 2020 or 2021 or something like that. And that was when he was doing like the whole core mentorship, where you had to like pay to get in and stuff like that. And I'm not gonna lie to you guys, I only completed up to like month 4, month 5 just my occupation that I had at the time was just way too consuming, and I just couldn't keep up with the trading. Or I could, but I was just, probably just expecting way too much out of myself. But anyways, from there, I just sort of slowly gravitated towards like his YouTube mentorships, and I studied the 2021. Sorry, no, not the 2021. I think it was the 2021, or sorry, the 2022, 2023, and then bits and pieces of 2024, and then like I think like one or two videos, if not even that, of 2025. So I sort of just pieced together majority of his concepts, and over trial and error, there have been certain concepts that just stuck out to me that I just saw, consistent setups around, and I just gravitated towards those, and then I just literally just somehow was able to organize it to the point where I can start making money consistently, consistently, and at the same time, the main thing was just taking the losses. If they do come, that's fine, because my risk management does the heavy lifting, and from there, like the winners just obviously outweigh the losers. So, but again, we'll be going into that into future videos. I just want to go over today's price delivery. So if we were to have a bearish perspective here, the reason why I'm saying it's bearish is because just looking at the higher time frame, I really like to see this right here be respected, in which it looked like it did respect it as it wicked through it, but it did not close anywhere near it. But then on the next day, on Friday, it just literally just blew right through it, and took out the high, and then continued higher. Then on this wick right here, if y'all look right here, let's bring this out. Look at the respect to that, and I really want to see these highs right here for it to be bearish. This could still go higher. That's totally fine, but just for what I'm seeing right now, I want to see those be respected and be left alone as all-time highs. This level hold right here, as retail would call it support, but this is just a daily wicks CE level in premium at the 23,773, and this Monday being a down close day, respecting that, and then just closing right above this right here, this daily wick CE level at 23,584.25 just gives me a confirmation. I think it's going to be bearish. So with that going in, it could, tomorrow it could be bullish, and we could just blow past this and target these. These are looking like equal highs to me as well too, but I do really like these equal lows down here. ES has some very clean equal lows right here. NQ made this jagged, while ES left these alone, so there was SMT divergence right there. But yeah, this is going to be a very nice objective for a bearish higher time frame bias in the future. So when it happens, I don't know. August is a very shaky month. It's my first time, like just taking it sort of easy, not like like forcing trades, forcing it, being in the market all the time. I think I'm like trading. How many days am I trading in August so far? Let's see here. And I apologize for my voice, guys. I did have a little bit of a cold, and I'm just getting my voice back as well too. So if it sounds a little itchy, a little scratchy, a little foggy, I do apologize. I'm trying to throw some water down as much as possible so I can have the clear voice. So I think in August I only have, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I think only 11 days I'm trading in August. And so far I only had, so tomorrow I'm trading, so that's what, 1, 2, 3, 4, 5, yeah, like 5, 6 more days. Yeah, so I don't know, I just expect August to be very consolidated. We could just hang around right up here, and then go lower, which is sort of what I'm expecting. I don't think the market's just going to go straight down, just like how it went straight up like this. I don't think it's going to be expected to go straight down like that. So anyways, let's have a bearish perspective in mind. So that means with the bearish higher time frame bias, we need a narrative to match with that. And a narrative is basically something that we use to frame a sell around, you know what I mean? And for this example, if we're bearish, that means we need to have a raid on some sort of buy side liquidity. So let's see here. So I usually start off my sessions around 7 a.m. New York Standard Time. Eastern Time. So which is right over here. I put a line right here to delineate that. And then from there, what we're going to do is we're going to mark out where price is creating equal highs and equal lows. So for example, after 7 a.m. by the way. So look right there. It's going to be labeled as initial buy side liquidity. And the reason why it's so specifically initial buy side liquidity, not just buy side liquidity, is because it's inside of a pre-session range from 7 o'clock to 7:30. See that? What the market is going to do is it's going to, within these 30 minutes, it's going to try to build a retail sentiment around what delivery has done. So for example, everybody looking at this right now, all the retail traders looking at this, seeing this consolidation right here, then just a sudden break. What are they going to do? What are they going to think? They're going to think that the market's going lower. To where? To probably, over here or somewhere below that. I'll fix the 15 and the 5-minute charts right now. But what does it suddenly do after 7:30? Look. Pushes lower, suckers all these people in for sells. Where's their orders going to be? Where's your stop loss orders going to be if they're smart? These are smart retail traders. Their stop loss orders are going to be right over here for buy side liquidity. Okay. And so what the market's going to do is it's going to go ahead and gravitate towards those highs, tag these people out, and then at 8 o'clock inside this first macro from 750 to 810. Price is going to spike higher and clear out all this liquidity right here. And let's be a little bit more specific of where it actually goes. So it does, we know it clears as buy side liquidity, initial buy side liquidity. And while it's doing that, what is it also doing? It's setting, look, these equal lows as initial sell side liquidity. And why is it initial sell side liquidity? It's initial sell side liquidity because it's in between that 7 o'clock to 7:30 pre-session range. If it's after that, then you can still label it as pre-session liquidity. I just label it after that. It's just like regular AM or just regular AM buy side liquidity or sell side liquidity. And then we'll go ahead and delineate that with this dollar sign being down here, and we'll make it red. And I apologize for the lag, guys. Not working with the best equipment, so just have some patience with me, and over time we'll go ahead and upgrade the equipment as well too. But let's see here. So we've got the initial sell side liquidity set after the pre-session range has been set. What does the market do? It rallies higher, it clears this liquidity up here, and in this macro, price went ahead and targeted this liquidity up here over here, which is post London session. And then let's see, what is it doing here? So we got, okay, this is Friday's delivery. Let's go ahead and configure our 5-minute chart to match with the 1-minute chart over there. All right, so let's see here. Okay, so let's see, what time does this raid happen? This occurs around 8:05, and then it retraces and it goes back up there again. So around 8:30. So 8 o'clock to 8:30. So 9:30. So we are looking at about right here. Okay. Then the market goes up there again. So if you wanted to participate, we could try to see if there's a setup here, but I like to get inside of the macros. I like to, as much as possible, you know, even if it's a little bit before, like 10 minutes before, you know, the macro actually starts. I'll try to look for that setup, but this is like way after. We're about, you know, 8 minutes past 9:20. It starts to make the displacement lower with the market structure shift. So that's about 22 minutes. Yes, about 12 minutes past the macro. It's something that I would not consider as a trade. Plus, you know, we still have the 9:30 open as well too. So we gotta see. We gotta wait. So let's see here. Is there anything on the 15-minute chart that will give us any indication? No. Okay, so let's see over here. So we have 8:30. Okay. So there is this. Hold up, let's see. Let's see if we can frame something. We already have a narrative set. So the narrative is if the buy side liquidity is out. It's been rated. And we'll go ahead and delineate that. Hold on. We'll clean it up here. Let's just get this out here. And I'll try to make this crisp as possible. I know there's a little bit of lag, but just bear with me here. So that's a 5-minute inversion fair value gap. So it's a 5-minute BISI, then it, you know, price trades respects the CE level, and then it trades through it. So that's how it becomes an inversion fair value gap. And then let's see here. The 15-minute isn't really giving me any indication of anything other than like this CIVI right here being reclaimed. That's good to see right here. Let's see if we can get this a little bit more. What time is it? 7:15. Yeah, I should do it. Where's it at? Why is it not coming up over here? So hard to work with this lag. It's like your cursor's not being responsive. $23,600. 23. Oh, it's because it's way below. Okay. So when is this? This is 8 o'clock. This is in August, bro. Oh my goodness. I'm thinking it's over here. I'm on the right day. It's not even the right day. There we go. That makes more sense. Cool. My bad, guys. It's like almost 12 o'clock in the morning. So, a little tired here. Just put my kids to sleep right now, and I just decided might as well get on here, try to use my time a little bit productively before I head off to sleep and wake up in the morning for the market. Okay, guys, let's go ahead and get back into this now. So yeah, nothing really on the 15-minute here as well too to indicate anything. Yeah, there is that 15 minutes inversion fair value gap right here. Okay, but other than that, let me see here. Okay, so we got this 15-minute inversion fair value gap. Cool. Starting to look like something now. Let's see how high this market goes up to. So what is it doing right here? Oh, look, would you look at that? What is it doing right here? Look. Okay, so that's for later. Okay, so it didn't even tag it. It left us alone. During this run up right here, this London buy side liquidity, which we'll label right now. Well, there we go. So that London buy side liquidity was left alone, and that was basically primed by the market to be used as a later time as a target, basically after sell side liquidity was ran. So once this low was ran out, which we'll talk about it here coming up at 9:30, once price came down lower here, there was some sort of sell side liquidity down here. price tagged that to draw up over here to the London buy side liquidity. It would have been dope if price came up over here, tagged this, and then made the move lower. Then that would have been a really, really good sell. But the fact that it did not take that London buy side liquidity and it used it as sort of like a primer for retail to think that this may be, you know, support. So this may be resistance, so that way there's a bunch of, you know, sell side buy side liquidity up here, bunch of buy side liquidity up here from London. You know, from all this move lower right here, people were just selling. So with all those sell orders, their stop loss orders are going to be in the form of buy orders, and that's like up here on these short-term highs and stuff like that. If they trailed it, I don't know, some of them probably just left it up here, you know. That's exactly what price targeted. This right here was let me see here. It took out this PDH over here as well too, so okay, so that's good to see. As far as this right here, 830, yeah, it just literally just ran past this post London buy side liquidity, so we can just label this as AM, okay? Or you could label it as preset. I don't know. You can just label it as buy side liquidity as well too. We don't have to make it too technical. But that's exactly what it is though. So let's see here. Basically, all the people from post London inside this range right here, they were just selling that, and then the market came up, tagged them, and it made this move lower. And that's what we're going to try to see if we can capitalize just on this move right here, just this move right here lower. And we can target the initial sell side liquidity, or we could target this. We'll just label this as AM sell side liquidity. And there's also, look at that, there's also that London sell side liquidity. I don't know why I said it like that. London sell side liquidity. It's actually pretty hard talking and like charting at the same time. So used to just, you know, like listening to music or just being quiet, you know, a quiet room, whatever it may be, and doing this. But it's just a little different to me to talk and chart up at the same time. So again, guys, really appreciate your patience. And I'm stutters as well too, as I did it again. But my mouth gets really dry when I talk, so I gotta hydrate. So anyways, let's go ahead and go see. This is running a bit too long. Let me see how long we've been going for so far. About 28 minutes. Okay, cool, not too bad. So we'll go ahead and see, label this as the raid. Okay, and we'll label that with a little, we'll get a little animated here. We'll go ahead and put that little icon right there. We'll make it yellow, stands out a little bit. Boom, there you guys go. So that basically, that little red rectangle right there basically signifies a buy side liquidity rate. And the market basically rallied higher around the 7:30, after the 7:30 pre-session range, and 8 a.m. we just had a huge spike inside this macro. Inside the macro, you can always expect price to draw towards the liquidity. In this case, it was the AM buy side liquidity. And also look at this right here. It was this 12 a.m. Open, this 12 a.m. New York open. Look how nicely that was respected. Beautiful, beautiful. And that's a really good confirmation that price is going to be bearish from there. And from there, the next thing we can go into is, look at this. This is going to be labeled as this move right here, going lower. That's going to be labeled as the displacement plus the market structure shift, to signify that basically liquidity has been extracted and we can start expecting an opposing program in this form. In this case, it would be a sell program that we're going to be initiating. And if you look over here, as we make this displacement lower, what is it also doing? Price is also cutting right through this 5-minute BISI. And if price would have been bullish, it would have respected that BISI and then went higher. But in this case, it did not. Cut right through it, inverted the 5-minute BISI into a 5-minute inversion fair value gap. And then let's go ahead and zoom in here a little bit. There we go. We can see the candles a little bit clearer. Look, as it inverted this right here, there was a 1-minute CB that was created right here. If I was to take a trade, which I didn't trade this whatsoever at all, but it's not a bad setup. Let's go ahead and make this a little bit cleaner. Okay. We would have entered off of this SIBI right here, and we would have targeted. To be honest with you, I just like to get my low-hanging fruit objectives, and I would have just either targeted this initial sell-side liquidity right here or the AM sell-side liquidity right here. So let's pull up our little short position right here, and let's see what kind of risk reward we would have gotten. So entered right here. My stop loss, I like to put it at the 5-minute inversion fair value gap CE level, just like whatever, like, you know, 1, 2, 5 handles above the CE level, just because like that's a balanced price range, and if price comes back up there and tags that, I'm done. I'm not interested in looking at it no more or trying to trade it, because I'm most likely my timing is wrong and price is not ready to move down lower, and it might want to grab, you know, one more time these equal lows right here and then go lower. But in this case, that didn't happen. You know what I mean? We had a really good confirmation of this displacement going through this 5-minute inversion fair value gap and then creating this 1-minute CB. So if I wanted to, like, my first objective would probably just be right here. This initial sell side liquidity right here at 23.7, 19.75, 50, sorry. 719.50, and easy 15 handles right there about, and about with a 1.35 risk reward. But I honestly, like, if I'm taking trades nowadays, I like to at least get a 2-to-1 risk reward, just so it's like worth my while, because even like this delivery right here was pretty choppy at the end of it. Look, this would have been a decent trade right here, 24 handles. But I just, yeah, again, I wouldn't want to sit through this. You know what I mean? I'm used to seeing trades where it's like, okay, you get your entry right here, and okay, like maybe like 2-3 candles. You know what I mean? Again, this is a 1-minute chart. There might be, you know, just a little bit of a teasing right here, just, you know, touch the CE level, and then look, these big candles right here, this continue lower, continue lower, continue lower. But again, you know, with it being a non-news day and being a Monday as well too, we can expect this type of delivery, and this type of delivery I just really want to stay out of. I don't want to be in the market. So this trade would have been from 828 to 853, which is about like what, 25 minutes, about something like that. I don't know, my math's probably wrong. 20 minutes and 48 to 25, yeah, I think it's 25 minutes. Cool. So my trades usually average around, like, I'm not gonna lie, like maybe like 10 minutes max, 15 minutes around there. 20 minutes, I mean, I would have definitely taken partials and moved my stop loss a little bit below break even, and I would have just held on to it another 5-10 minutes, and I would have hit my TP and just would have been done for the day. Very clean setup. Usually risk around 0.5%, so like half a percent. You know what I mean? That's half at 1%. That's all I risk. Keep it very static. I don't like to go around and you know, mess with the risk or anything like that. And it makes it a little bit easier for me as well too, because being on the 1 minute chart, like these entries, like they can come pretty quick, and if you're not like on it, and you're like you don't see something, or you just woke up and you just got a little bit of a foggy mind or whatever it may be, and you may feel a little nauseous or whatever it is, that's some of the things that happen to me, but you might miss it, so to me, and the way that the prop firms have their little risk allocations and all that stuff, and how they have it with the trailing stop, not with the trailing stop loss, with the trailing draw limit, and they also have a consistency factor as well too that needs to be thought about as well too when you trade. But just so when you take profits, like you can't be taking just winging it on the last trade before your payout, and having a majority of your profits be from that single trade. So they, again, and every prop firm is different as well too. So, but regardless, a 0.51% risk per trade works for me, and I am going to be looking to, when I feel a little bit more comfortable, maybe make a payout or two, sort of scale that up, and maybe try out 0.75 and go into a 1% risk. You know what I mean? Maybe do that in different accounts, but that's the future. Who knows? Excuse me. So yeah, not bad. A 2.221 with only a risk reward with only a 10.75 11 handle, let's just say, stop loss. You know what I mean? That's the most impressive part about this setup, which is very tight stop loss, and yeah, just very nice delivery, except for this mess right here. This would have just mentally would have been hard to hold through, and then we get a nice delivery to the target right there. Didn't want to even consider doing that. Like if you look at this target down here, it would have been nice, about 42 handles, but realistically, I mean, with trading with funded accounts, I'm just trying to keep my targets to a very low-hanging fruit objective, and just basically getting in and getting out, and looking to trade for another day. That's it. I'm thinking more about longevity, and it's really nice because I know these setups repeat over and over again, so it really takes the stress off of me. All right, so. Cool. That would have been the first sell around 828. I don't really like to trade before the 9:30 opening, so I like to trade after. And sometimes you just don't get the setup, you know what I mean? Sometimes it happens before, like you saw right there, but it is what it is. So anyways, after the chop, we have price chop, you know what I mean, to the second macro as well, two, sorry, and then from there we have 9:30 open, and that's when it takes the London sell side liquidity. So now there is a raid on discount, so the discount is made jagged. Okay, so let's go ahead and make that the raid. Now, basically, if I wanted to be long, I would just look for the same thing to be long now. So, like, once the narrative is in play, and the narrative is the fact that the London sell side liquidity has been made jagged. Okay, so all these people that were long, and they survived this retracement, and they moved their stop loss up to this retracement, and they were long again, or new longs were coming in over here. All those people right now literally just got their stop losses hit. Anybody that was in profit, anybody that put their stop loss right here, all of them are gone, chasing this momentum run right here, and here. Okay, so that's what the narrative is. This is the raid is the narrative. Okay, so that's what this is telling you. Okay, that means that discount has been made jagged, and now we need to start looking for smooth equal highs for price to draw to in the form of buy side liquidity, and that is right here, which is the London buy side liquidity, which we can see price easily just went ahead and tagged that. We can make this a little bit transparent now, so that we know that this level has already been made jagged, or it's been rated for the buy side liquidity. I don't like to take it off my chart just because it just sort of gives me the intuition like, okay, all right, there's already been a stop on that level, so I just need to look out for that, you know what I mean? And the transparency thing helps because it doesn't, like, you know, make it so apparent in my eye. Like right now I'm focusing on this, you know, that's where my eye goes to, right when this has been made jagged. Okay, so we can go ahead and even make this transparent. We'll just leave the London buy side liquidity, since that's the most recent one that was made jagged. Sorry, London sell side liquidity that was recently made jagged, not the buy side liquidity. The London buy side liquidity is what we're going to be aiming for, so we're going to be seeing the market draw up to. Okay, and we can also make this initial sell side liquidity transparent because this level has been made jagged. Jagged in the form of price has made a raid on it. Okay, just different terminology, whatever I can do to make it easier. If anybody's following along, nobody's following along, y'all just listening to it, it's no worries. Okay, so cleaned up the chart a little bit, and now let's go into the opening. Okay, so at 9:30 price opens, there was a wick higher into the open. So this white rectangle that's pretty faint, that you guys see from here to here, that's the opening range gap. Opening range gap is basically the close from yesterday's market and to the opening at 9:30, and the market closes at, let's see, what time does the market close here? Market closes at, I'm talking about the day close. Let's see here, it's like what, 16:45. So like 17. So like what time is that? Like, I think it's like 2 o'clock, 2 p.m. my time. So Eastern time. That's 5 p.m. Okay, so 5 p.m. when the market closes, it's that level, that close to the 9:30 equities open. That range, whatever that range is, that's what this is being measured right here. Okay, so the opening was right here today. Okay, yesterday's close was right here. All the way up here where the London buy side liquidity is, which just adds another layer of confluence for price to gravitate towards that. Okay, especially with price creating a premium opening range gap. And the reason why it's it's a discount opening range gap. The reason why it's a discount opening range gap is because I believe this is Friday's opening range gap Friday's close was right over here, around here, like 23,764, and today's opening was at 23,715.75. So basically, price ended up opening lower, and with that opening up lower, it gave us the Judas swing that we were looking for price to raid this London sell side liquidity, which also gave us a narrative to start looking for buys. Which, again, we weren't looking for buys, but I'm just, you know, going with the tape read. So we get the raid. We have this opening range gap high as a target. We can also target the CE level of this, which is just the midpoint or the halfway point of the opening range gap. Sorry, and then we also have this London buy side liquidity. So we have plenty of targets to the upside premium, which is a very good thing. And let's see here. After this raid, we need to look for a displacement, and we need to look for some sort of market structure shift that indicates to us that the market is done rating for sell side liquidity and is ready to move in the opposite direction. So that's gonna happen right here. this green line is identifying a displacement. Big, these big white candles, these big white bull candles, that's indicating displacement. Market structure shift is indicating that price is shifting into a buy program now after the raid on sell side liquidity. So immediately we need to go over here to the 5-minute chart and see, okay, where is their 5-minute CBs being turned into inversion fair value gap. So there's this one right here. Okay, here we go. Let's use a magnet. Let's go ahead and tag this right here. Go ahead and bring this out. Oh my goodness. It's very hard to work with the lag, guys, but it's not too bad. It's not too bad. We're gonna make it through it. Almost done here anyways. So we got this 5-minute inversion fair value gap. Is there any 15 ones? 15-minute. Okay, we can go ahead and get this 15-minute. Is this one even lower? This one's even lower than that. Okay, cool. Go ahead and get this 15-minute inversion fair value gap there. Sometimes the chart can look a little bit messy. I usually wouldn't even have any of this, but I'm just keeping it just, you know, just to see that the work that we did. Let's go ahead and bring this out. Look how beautifully that respects the CE level. Okay. So this is probably enough context to frame a sell, or sorry, a buy. Displacement, market structure shift higher. Now we're looking for a 1-minute BISI. Okay, we're looking for a 1-minute BISI to get in on. And look at this, it just pops out right into my eyes. Let me see if y'all can get it too. I'll give you guys a couple seconds while I find this right tool. So if you guys were looking at this BISI right here, as price cut through the 5-minute inversion fair value gap and the 15-minute inversion fair value gap, this CB right here is what we're looking for. BISI, sorry, I keep saying CB. This BISI is what we're looking for. Here we go. Let's go ahead. Yep, cool, perfect. Got the right settings on there. Go ahead and drag this out, clean it up a little bit, make it a little bit easier to see. Alright guys, this would have been a wild trade, and we most likely would have gotten stopped out. And that's just the reason why I do not trade these type of days, because even if your target is hit, even if, you know, price does gravitate towards there, which it does very nicely, you know, it just like this sloppy mess right here, this back and forth, and this tanks, and then it goes back higher. Than this right here, just this is Trump talking right here, by the way, at 10 o'clock. This is when you started talking, wicked it, and which only this only tells me that it's gonna be price is gonna be bullish, nothing else. And the reason why I can tell y'all that is because look at the wick, look what the wick's doing, and look where the body's at. The wick is respecting the 15-minute inversion fair value gap CE level. It's respecting the 1-minute BISI CE level, and it's respecting the 5-minute inversion fair value gap CE level. And what do I mean by respect? I mean the fact that it's keeping out of the lower quadrants out of all of these inefficiencies. Look, clear. Look, no delivery and price down here. Okay, that's what you want to see when you're in a buy program. That's when you know that price is going to be gravitating to your objective very soon. Okay, so let's break this down. So how could I have entered? So I'm outside the macro right here. Again, once again, guys, I'm pretty strict on my rules. I wouldn't be taking like a reversal like this, especially on a non-news day. But cool, you know, whatever. It's material to digest. Is building up our reticular activating system, and this is literally the work. You know, this is how you get better as a trader. You know, Kobe Bryant shot his free throws to get better. Michael Jordan, you know, did the same thing. You know, go to any other boxer out there. You know, Canelo Alvarez in the gym boxing. You know what I mean, throwing different punches. Dimitri Bivol, you know, footwork, all this, whatever. You know what I mean. Messi, Ronaldo, they're literally in the gym. You know, practicing and focusing on the craft. This is exactly what we're doing, guys. So if anybody's made it this far into the video, I really appreciate y'all. Appreciate you guys for your patience. And yeah, let's continue on. And that was just a little motivation pep talk. I guess that was towards myself, you know what I mean? Because I'm trying to get this done. But let's see here. So I truly would have really liked this setup. Just the fact that it's right before the macro. And again, once again, guys, in the macro, price is going to target an inefficiency. Look, as soon as it opened, what did it do? 950 is when the macro opens. 952, what did it do? Targeted this 15-minute inversion fair value gaps low right here. Okay, and then it just took off from there. From there, once again, inside the macro at 10 o'clock, with Trump speaking, it went lower into this BISI and the 5-minute inversion fair value gap and the 15 one as well too, and then it just took off higher. So truthfully speaking, I would have probably traded this right here. All right, I would have took it that, and just with it being like when you get 17 handle stop loss, I don't know. It just really depends on what I would be thinking during this trade. I would have probably put it right here. If I'm being 100% honest with you, I would have been stopped out, which would have been perfectly fine. But if I would have been like, you know what, let's let the trade breathe, I would have just had it right here. Okay, which is the low of this 1 minute BISI right here. Okay, this candle right here is the low of this candle, which is still less than 20 handles on Nasdaq. That's very good. All right, that's very good. I'll try to get my stop losses anywhere from, like, I don't know, I had some super tight stop losses, and like they played up like perfectly, like 10 handle stop losses, which is like crazy on Nasdaq. Nothing less than like 10, I don't think. I think there's like been times where I had like 8 handles, 7 handles, but like again, those are like trades that are like not all the time trades, like just once in a while. I don't like to go past legit a 40 handle stop loss. I'm okay on the setup on that. I'm cool. I'd rather just sit that out and wait for something like this, not legit like this, because it was too sloppy for me, because it was a consolidation. But something with like a 15 to 30 handle stop loss is a doable trade for me. Anything over that is just, I don't want to put my mental strain for that. If I do take that type of trade, I'm sizing down. So let's say we're stop losses over here, still less than 20 handles. Cool. Where is our first target going to be? First target could easily, why is this coming up with me? First target could have easily been the opening range gap, upper quadrant, which is about 28 handles. Then it could have been the 12 a.m. Eastern time open, 31 handles. From there, which would have been the last objective, would have been the London buy side liquidity and the opening range gap high, which would have been about 41.75 handles. And that trade would have been, let's see here how long this trade would have been. We'll be looking at about from 9:45 to 10:19, so that's 34 minutes. 34 minutes get you a nice little bag right there. Perfect 2-to-1 risk reward setup. I just, again, that choppiness would have just, not interested. I'd like to see like no choppiness, price raid, displacement higher, market structure shift higher, creates these not imbalances, it creates these inversion fair value gaps, and either on the 5-minute or the 15-minute, or there's a 5-minute BISI with the lower quadrant that's been balanced, and then there's a 1-minute BISI like this, and I'll enter on that. That's literally all I'm looking for. Then I'll just target whatever the target is. I'm looking for low-hanging fruit objectives, so I probably would have gotten out right here at the 12 a.m. Eastern time open. Totally fine, you know what I mean? Or I would have just taken some partials, stop loss and profit, and just let it ride out till there. That basically would have been my trade. I would have just closed the charts from there. I wouldn't have been interested no more if I was looking for longs, you know what I mean? But let's keep on going though. Let's see what we got here. So after Trump spoke, Let's go ahead and scoot these out. You got again. Look how sloppy that delivery looks. It's just like so consolidated. A lot of live streamers I was watching that were trading had a pretty difficult time with the markets today. You know what I mean? It wasn't an easy day, and these are the days that it's just better to sit off. You know what I mean? Sit off, relax, go do something with the family, go do something for yourself. You know what I mean? Go do something that you normally wouldn't do. Put time into the things that you're slacking on, whatever it may be. And I try to do the same thing. And now it's like I'm really appreciating this whole YouTube stuff because I'm not studying ICT as much. I got my trade plan, I got my model, whatever you want to call it, and I'm legit just having fun, and I'm just trying to document that, go on these nice little tape reading rants, whatever it may be. This is fun though. We're having a good time here. At least I am. It's fun to me, and this is legit. This is the work to get you guys good. You know what I mean? I countless nights that I spent doing this. And we'll talk about that all in future videos. We'll go ahead and put up my old journals and compare and contrast to how I was then to where I'm at now. And yeah, man, it's gonna be good, you know what I mean? And especially if you're into the whole ICT stuff, or even just in trading in general. I don't want to even bring up ICT like that, but just in trading in general, you know what I mean? Like if you love it, you have a passion for it, you want to grow yourself, you know what I mean? Then just doing things like this, and like, look, it's 12:30 right now. I should be sleeping right now. I gotta wake up at 4, but we're over here crushing it, trying to get this first YouTube video out, so let's stay on task. Okay, so the only thing I'm doing right now is just moving the opening range gap. It has the 5 previous gaps in this table, so it makes it pretty easy for me to see if there's like a target that I'm not seeing, or whatever it may be. And it gets in the way a little bit sometimes, so I don't like really having it here, but it is what it is. It's pretty helpful because I don't have to put the opening range gap manually. It just does it for me. So let's see here. What are we doing here? Where did we leave off? Okay, so cool. So London buy side liquidity got made jagged here. Okay, so if you were long, that would have been the long that I would have been looking for. You know what I mean? From there, we get this nice reversal off this London buy side liquidity. I don't know if I would have traded this because it's a very fast move down before the macro even gets in play. So, but let's go ahead and do a little tape read on it. And then after that, we'll be done with this day's review. Okay, cool. So we got our raid. Let's go ahead and give it a little bit of animation. We'll go ahead and add a little triangle right here to signify that the narrative has been set now. Okay, and the narrative is the fact that now all the people that were basically, once again, selling from London, that were just in this mess, thinking whatever the hell they were thinking with their, bull flags, bear flags, whatever the hell. In this mess right here, then once price tagged this London buy side liquidity, then price tanked again. This move lower, where is it at? That move lower that resulted in the London sell side liquidity tanking, that produced a lot of sellers, and their buy stops are going to be up here. So with the price tagging those right here, it gives us the correct narrative to go ahead and frame a sell on that. Okay, so now that the buyers have been trapped with this London buy side liquidity rate right here. Sorry, I'm at the sellers. Now that the sellers have been trapped, it's late, guys. I apologize. Now that the sellers have been trapped with this London buy side liquidity rate here, now we can go ahead and look to see if we can go into shorts. So let's see here. So we're gonna go ahead and look for a displacement lower. Which low would we use here? I like this move right here. 3 candles lower. Okay, going in the opposite direction of this uptrend right here. Okay, so we get the displacement, the market structure shift lower right here. But notice there is no 1 minute CB that appears here. Let's see on the 5 minute chart where we at right here. Yeah, there's legit, it's just chop. There's nothing here on the 5 minute for me to base anything off of. And I don't really like to go back too far back to look for because I know I can go back in a day, 2 3 days, and and look for these bissies, and I can drag them out in time. You know what I mean? But I like to use the recent ones. You know what I mean? It just makes it a little bit more cleaner, and that way I don't have to like force anything. I'm not trying to force a setup or anything like that. So with this raid being occurred right here, there's nothing on the 15-minute. There's nothing on the 5-minute. There's no imbalances. So I'm not taking this trade. Legit, I'm not taking this trade. There's one right here, one small little 1-minute CB right there. I wouldn't even paid attention to that. That price just tanks. Goes back into this 15-minute inversion for value gap. Yeah, and then from there it's just continuously going up higher past the 4th macro. After this right here, and I wouldn't have even taken this trade right here because price is just trading into this 15-minute inversion for value gap, and it's been respecting it nicely, especially since the CE level right here was respected, and price just made a nice run off that. And once again right here, look, CE level doesn't even come close to at that time, or sorry, it does come close to at that time but doesn't touch it, and then just takes off again. So that's basically all of the review. So the only good setups that there was were just these ones right here. It was this short before the 9:30 opening, which is pretty nice little 2-to-1, and then this long right here, same thing in 2-to-1. A little bit more choppiness, could have been stopped out more of this. This is probably more riskier move, riskier setup, and this is more cleaner. So that's pretty dope. You get to see two options basically, one sell, one buy, using a bearish higher time frame perspective, and depending on what type of trader you are and what you want to look for, you could have taken either or and it would have been just fine. You know what I mean? But again, just really depends on, like, this setup would have just been a little bit more risky once again, especially after the 9:30 opening, and then with Trump speaking, it just really causes a sloppy market, and that's not the best to trade. So moving forward now, I really want to go ahead and just mark up for tomorrow, get everything ready, so I'm not, the worst thing I hate doing is just, waking up in the morning, and on top of that, waking up sometimes late and not having my markups done or anything like that, and just being in a panic. So I'm going to just spend a little bit of time not really dressing the charts, so I'm just getting them ready, cleaned up and stuff like that. Cool, not really concerned with the market's doing right now. Okay, so I do want to see the higher time frame real quick. Yep, I like the fact that this level is being respected. Moving lower, I want to see not prices trade through this level right here and this day's low. Possibly target this right here. I like this little liquidity void. Are we still recording here? Let me see. Yeah, we're still going. Alright, guys, appreciate anybody that has made it this long, and once again, I appreciate you guys' patience. I am starting to feel a little bit more comfortable behind the mic, starting to stutter less, and on top of that, just be more comfortable with just, charting up, reviewing, market reviewing and stuff like that, and talking at the same time. Like, it's a new way to just develop my skills, and it's going great on my end so far, and I appreciate anybody who's tuning in. So we got a liquidity void right here, and that would be a pretty good target for me, to be honest with you, but this is my first target right here. I like those equal lows, how it's making those. So we're gonna go ahead and put daily. I think it's like the lag is even getting better as well too, guys, so the Wi-Fi must not be getting used right now, so that's good. Everybody's passed out. Okay, daily sell side liquidity target right here. Let's move that out of the way, clean it up. Let's go to the right. Boom. Perfect. And then let's go here. We'll put this target as well too. We'll just go and type it in. So that's the 23,587, the 23,503. I don't think we'll get to this level tomorrow. What is tomorrow? CPI, man, dude, that's gonna be a tough day. And then we have right away after that. We have so when it's like CPI, and then immediately there's like yellow photo news, it like tends to like deliver with a sharp, like there's gonna be like a sharp move for sure, obviously. And then after that, it's just like, watch, it's just gonna like consolidate. It's just gonna be so choppy. Like that's what I feel like it's gonna do. And again, once again, those conditions are very hard to trade in. Not really hard, but it's just hard to manage your position. You know what I mean? Sometimes, as it just keeps going back and forth, back and forth, back and forth, and those are not the ideal times to trade. So we'll see how it goes, though. So yeah, I think more of a realistic target to the downside would be the 23,587, which is also confluenced with the 23,584.25. Hopefully, it doesn't run the lows already, because sometimes that will happen to me as well too. If I have like, you know, a level I'm looking at on the daily chart before market opens at 9:30, it's already ran that, and that either means that, you know, it's not going to come back, or it's going to reverse off that and go higher or something. So okay, so we got this marked out. Let's go to the 4 hour real fast. Let's just check it out. We had this 4 hour. Look, guys. So we had this 4 hour CB right here. Price trades up into it. Where's Monday? Monday's right here. Look at that. Look at that CE level. Just barely trades on this right here at 10 o'clock when Trump was speaking. Trades higher. Wixit clears the buy side liquidity up here and just trades lower. Look at that. And just respects this 4 hour inversion fair value gap as well too. And yeah, we've just been trading lower. Now we're at the low of that 4 hour inversion fair value gap, and we're just weakening at the low of it. So that's really good signs for bearishness. So I would just like to see price come down over here, and maybe test off this 4 hour CB. So 23,535 could be another level that we could be looking out for as well too. So I'm gonna go ahead and just go like this. Actually, 23,550. That's gonna be the 4 hour CBC. We'll label that. Nice. Okay, so yep. Okay, so that's for NQ. So I'm bearish on NQ. Let's go ahead and clean up ES up real quick. Let's see here. Visibility. Starting to get a little bit tired now. Starting to get that brain fog, but let's push through it. So let's see here. What am I reviewing here on ES? Let's get rid of that. Daily inversion fair value gap. Okay, that's a busy. Okay, so it's staying above that. I don't like that. I do like this. I really like these lows right here on ES. That triple bottom, man, dude, that's gonna be a really good target. Whenever it wants to go down there, it's gonna be a really good target at the 62.35. So we got this and we got this right here. Okay, nice little daily inversion fair value gap CE level right here, confluence with the PDL from Friday at what is that? What level is this? Tripping out. It's 63.69. Okay. So let's just go ahead and label this. Daily sell side liquidity. Awesome. Okay, cool. Perfect. All right. So basically, we have price on Monday take out the previous 2 days highs, close right above the daily inversion fair value gap. That's good to see though. Monday right here, price which is in the upper quadrant of this 4 hour CB, but failed to stay up there, broke through the CE level and reclaimed the CB, and now it's at the low of it, so that's really good to see. Actually, you know what, I'm gonna bring this out to the daily chart. And then let's go back to the daily chart, and then we can just go like that. Boom. Okay, so I basically want to see price stay below the 4-hour CB low, which would be like where it's at right now, like 64.04, and I definitely want to see it stay away from the 4-hour CBCE level, which is 64.14.25. So bearish expectations for this as well too, especially with the yesterday rating the 2 previous days highs. But you know, this could very much go higher as well too, and just yeah, take out, you know, this all-time high as well too. I don't know, it just has this 4-hour CB right here that's been respecting it, and I just think that it's gonna pull back and try to hopefully start targeting some of these liquidities right here in discount. That'd be great to see, because we've been just going higher and higher and higher, and I've been just waiting for the sell-offs. So okay, let me see here, what do I want to transition into real quick. Okay, so we're gonna move this forward over here. We're gonna go briefly over the new week opening gaps. I just use these mainly to confluence, you know, over price action, price delivery, just target. Sometimes there is no equal highs, there is no clear target, and that's where I can use the new week opening gaps, highs and lows, even the CE levels, to find a target and exit, or even a stop loss, you know. So let's see here, let's go to Sunday. All right, so Monday's open, here we go. Sunday's open, sorry. So this is basically how you would find the new week opening gap. So since there is no separation like that, we're just gonna label this one right here. And if you do the back test on the new week opening gap and the new day opening gaps, you will see how price gravitates to these levels like a magnet. I mean, it's ridiculous, you know what I mean? And I'm currently working on just having the patience, you know what I mean, to hold to these objectives, because it's crazy to me, you know what I mean? Because obviously I get out, you know, as fast as I can with the low-hanging fruit objectives, but I just, you know, watch the market over time, and it just, you know, gravitates to these levels like so cleanly, you know what I mean? It just takes a little bit of time, and I just don't got that holding strength yet as a trader. But I'm working on it though, you know what I mean? Gradually, with experience, exposure, you know what I mean? Doing the uncomfortable things, you know, I'll get there. So currently right now, like look at the respect to this. Look, let's just start from right here. Look, price tanks, go straight into this right here. That's like precision right there, you know. Tanks literally goes into this new week opening gap at 23,337, 23,237.75. Tanks from there, it goes immediately into this cluster of new week opening gaps and discount. And yeah, I mean, just look at the precision to that, and look how just prices, you know, over the day just gravitates to these levels. So that's why you want to have these on your chart, because it can be really good for profits, for profit taking, especially if you have no clear you know, objectives. So from here, price uses this as support, rallies from there, goes back into this level, rallies again, and just under this level right here, breaks lower from there. That's where we have a new week opening gap again. It's every Sunday, so new week opening gaps for yeah, Sunday's opening, and then from there drops down lower to this one, and it just rallies back into this, and then from there we got this new one right over here. So now I'm expecting price to, I want price to literally, like, this is looking very nice. Look, there's equal lows right here, so we can expect price to most likely like gravitate towards like right there, the middle of this new week opening gap from July 27th to July 25th. So yeah, this would be nice to see like on Friday to do a little review to see how far price actually respected these levels. But yeah, this is looking good for bearishness. So let's go ahead and go jump over to ES real quick, and we'll do the same thing. We'll go over to Sunday. Here we go. All right, go to Sunday. Go to 1 minute chart. Let's do that again. Same thing was over here. There was a little bit of a gap, I guess. So wrong tool. There is the new week opening gap right there, and then there is, let's see, where did it open? Right there. It's very small, nothing crazy, but we'll go ahead and put the high and the low. So this is from Friday, August 8th, 2025, and that's the high, and this is the low. This is Sunday, 10th, August 2025, low. Cool. And then we'll go back to 1 minute chart, or 1 hour chart, sorry. Go on and go here, look. Let me just look at the respect, same thing, just like NQ, he's been grinding higher. Now I like the fact that we have this cluster right here, and we have, you know, basically have this huge, you know, cluster of new week opening gaps right here, so we can just gravitate to anywhere in between this range. That'll be great to see happen this week. If not, I don't know, hopefully next week, but we'll see how price delivers. Okay, and then just for a brief second, I just want to go over, not too much in detail, just very brief, the new day opening gaps and how they're used, which is very similar to the new week opening gaps. It's just that the time reference is different. And so with the new day opening gaps, they're Monday through Thursday, and it's the close at 2 p.m. Pacific Standard Time. I gotta think about this. And then the Eastern Time, that'll be a cover. What is the Eastern Time? It'll be 5 p.m. Sorry. So it'll be 5 p.m. Eastern Time close, and then the open at the next hour open, which is at 6 o'clock. You know what I mean? That difference is what the new day opening gap is being measured with. Okay, and since it's Monday, we actually do need to do it for Monday's delivery, don't we? We do. Let's go to the 1 minute chart. We'll show you guys how to do this real fast. Go to Monday. Go to 1700. Let's see here. 2 o'clock. There we go. Market closes, and then the next candle, which is 3 o'clock. That's Pacific Standard Time, guys. Again, I keep getting that mixed up. I like to only reference New York Eastern Standard Time, because that's basically that's what's, you know, being referenced for trading, and to make everything easier. So 1659. We're gonna go ahead and put the close of this, which is right there. This is gonna be what is a new day opening gap, and then this is gonna be the open, which is right there at 6 o'clock Eastern. So it's gonna be new day opening gap. Let's go ahead and label this Monday, 11th August 2025. This is gonna be the high. And what I'm basically doing is having this chart up. So I have two monitors, and I have a screen up of the new day opening gaps and the new week opening gaps with the layout on TradingView, just like this. And I have it on the 1 hour chart just basically for, you know, to see what price is gravitating towards. A lot of times when the price makes a raid on liquidity, there will be like a new week opening gap cluster or a new day opening gap cluster, and that just adds more confluence, yeah, it just adds more confluence and just gives you more confidence on your setup. This is gonna be the low. And when I do start doing the, like, you know, live trading and stuff like that, which I just don't have the setup for live trading, I just, I tried doing it. It was just very, very, very choppy, very choppy. You know what I mean? There's like no point of it, you know. So let's see here, and even like, you know, before you know, doing this YouTube video right here, I just wanted to make sure that my sound quality was like really good. Not really like, not like crazy good, you know what I mean? But like at least it's like, you know, not annoying to listen to. And I feel like I got it dialed in pretty good. Let's see here, and over time, you know, I'm gonna be hopefully getting you know, some better equipment and stuff like that, so we'll be able to do some live streams. And you know, I'm not too worried about it. You know, I'm just trying to take it slow with the YouTube thing, and just it gives me something else to do. You know what I mean? When I was just used to just, you know, studying all day just behind the charts and stuff like that. So now that I have all this empty time, you know, other than just taking care of the kids or being at home, you know what I mean? It's just, you know, something else for me to do, and you know, I find it pretty enjoyable as well too, to be honest with you. Definitely, you know, as I keep continuing to make these videos, I am gonna definitely progress, you know, and figure things out, and dial things in, and just make the videos more crisp and clean, and with all the editing and all that stuff, you know what I mean? But in the beginning, we'll take it how we get it. No worries. And what am I trying to do here, man? Let's go, come on. So 1700, here we go, whatever. Cool. This is the ES, by the way. We're doing the same thing. We're going and just hitting up the new day opening gap for Monday. This is actually nice. See, look at that. ES has more of a gap, okay, than compared to NQ. Look at NQ's gap. There you go. Look at NQ's gap compared to ES's gap. You know what I mean? So that's pretty significant. Alright, so this is Monday, 11 August 2025. This is the low. And I might record tomorrow's session of me trading. I just don't want it to impact, you know, with my technicals and stuff like that, because if it starts lagging and, you know, it takes forever to bring up a tab for me to enter my trades or whatever it may be, I'm not going to do it. The last thing I need is some technical issues when I'm, you know, in live trades and stuff like that, and, you know, I just don't got the mental capacity for that. So if it works out, it works out. That'd be great. If not, then we'll definitely be doing like a review like this. So perfect, I got those levels set up, so now I'm basically all set up for tomorrow with all my chart levels and everything. So that way I'm not panicked or in a rush or anything like that. And I'm mainly going to be looking for shorts tomorrow, see how it is. I see how we do around 7 o'clock Eastern time. I want to be on the markets then, looking live price action. Alright, I'm just changing. Just getting everything ready basically on the right time frames for me to sit down and just look at it. All right, cool. Did that. Okay. All right, we're all set up here. Now we just gotta edit my journal real quick. Let's see here, we'll go here. And then I'm also gonna do another YouTube video breaking down the journaling and all that stuff. Over the years, I've gotten really good at journaling. If you guys look over here, this is only on TradeZilla. This is 467 days journaled, you know. And just to give you guys, like, you know, as an example, we'll go to, like, you know, one. Here we go. We're one in June 4th. There you go. Didn't even trade it, but it's pretty detailed. You know what I mean? I try to make it as much details as possible before, you know, like in like April, I think, or, you know, something like that. I see, again, like, this is very detailed, you know what I mean? Notes, what I did great, minus just software on trading, mistakes I did, psychology, all that stuff. And it took, like, you know, years for me to refine this, get it organized to the way that I want it. And I think I did a pretty good job. And a lot of people's, you know what I mean, journals, I'm not trying to throw nobody under the bus or call anybody out whatsoever at all, but a lot of people don't put emphasis on their journaling. And I like to journal. I think it's literally like, Kobe Bryant. What's free throws to Kobe Bryant is basically journaling to a trader. You know what I mean? Like Kobe Bryant shoots free throws to get better at free throws. Obviously, trader needs to do the same thing, which is journal, document, reflect on the performance of trading. So, yeah, we're doing our free throws right now, guys. And over time, I don't know, I just like a new wave of confidence has just overcome me, I guess you could say. And I don't like before. I was very, 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 very detailed with trading. I had to make sure I get this, make sure I get that, correct screenshots, you know what I mean? Everything is clear, everything is good, nothing's blurry, whatever it is. Now it's just more, I'm a little bit more loose with it, you know what I mean? A little bit more free with it. And yeah, you know what I mean? Like I don't even journal every day. Like for example, before I used to journal every single day, even the days that I didn't trade, I would still journal those. And that was just to build the reticular activating system up and get me more used to seeing the setups, and back then I was, digesting a lot of ICT concepts, so I was just trying to get the practice in. But now it's like, it's very weird because like now it's like I don't need to review as much, I don't need to, study as much, and it's just like clockwork to me now, which is exactly what you want it to get to. You know what I mean? You want your trading to just be like clockwork, like you're like just going to a 9 to 5, in and out, boom. But you're just not working a 9 to 5. You're doing this like in minutes. My watch list is always going to be just MNQ and MESU. Directional bias. We already covered the bias. I will be adding a screenshot just to see how we do here. I just like to look at it afterwards to see how to play it out. Sometimes sometimes you get it wrong, and that's totally fine. We'll go ahead and attach that. We'll go ahead and attach this. So look, 4-hour CB price is already coming up there again. It's not a good sign for bears, but it's all good though. You know what I mean? It's not even close to being New York yet. I just took a full screenshot. Didn't even do that. Let's go ahead and do a screen snip. Oh my gosh, it is the same thing again. Getting tired. Almost the same thing again. Look at that. Okay, here we go. And that is basically it for a pre-market game plan. Everything else. This is basically my trade plan right here. Planned out contingencies, my risk management, my trade management, and yeah, basically I'm set to go for tomorrow. This needs to be changed for Tuesday, not tomorrow. Oops. This needs to be changed to, there we go. We didn't trade Monday, so yeah, like so before I would have had Monday on there, and I would have just done like exactly what we did right now on the charts, all that stuff. Would have had screenshots of that and all the notes and everything like that. Why this is not a good day to trade, and why what I mean. I should not have taken this trade or whatever it may have been. You know what I mean. So, and then as promised, we'll review a little bit of my prop firm status to see where I'm at, where my journey is so far. So just give me a little bit. I had to grab my phone from the other room real quick. Alright, sorry about that, guys. I need to get my phone so that way I can do this two-step authentication thing that they have me set up. So let's see here. Perfect. Alright guys, so basically currently I have three 50k funded accounts through Apex, and it's been going pretty well, pretty steady. You know, again, August is a pretty sloppy month in terms of price delivery to trade, so I'm just taking it really slow. I'm not really trying to rush it, but currently I do have 9 days traded. I did miss the first payout just because I didn't have enough. I didn't have the what is it called, the buffer. I think it's their buffer is $2,600. So basically anything below that I can't withdraw, but once I have the buffer in place, I can go ahead and do the lowest withdrawal. I think it's like $500. So I have 3 accounts, so I'm not really too stressed about it. I'm just really honestly trying to take my time, and I'm shooting for a payout by the end of this month. I'm not really trying to stress on it. I don't like really necessarily like have to get a payout by the end of this month, but it'll be nice to get one. But long term wise, I really want to build these accounts up, at least build one of them up, and just do a massive payout. And I'm not talking about hundreds of millions, but nice, at least a $10,000 or a $20,000 payout would be great. Which again is not crazy massive, but it's definitely a start. Coming from last year, I did get payouts, but then I lost my funding, and I went back to the drawing board. I had to reconfigure, my trade plan. I had to reconfigure my psychology, and now we're back at it. So it feels good to be funded through Apex. It feels good to have 9 days on the board. I need to get 16 days now to request my first payout through these accounts. So until then, we'll see what's up. We'll see how tomorrow is going to basically be traded. Definitely gonna be looking for shorts. So until then, guys, really appreciate you all for tuning in, and appreciate you guys' patience, and we'll definitely catch you guys on the next one. Okay.